first week of 2018 marked the peak of the 2017 bull market. Now, to quickly explain, bull market means a long period of sustained increase in price. Bear market means a long period of sustained decrease in price. And bull and bear market operate in 2 years interchangeably. So we have 2 years of bull market and 2 years of a bear market. As we can see from this chart, this is the crypto total market cap chart. So it puts the price fluctuations of all cryptocurrencies in one chart. This green candle that you see here is on the last week of 2017. You can see here, this is the 25th of December 2017. So the next candle will go into 2018. So it is in the first week of 2018 that we actually saw the peak of the 2017 bull market. Now this is the peak right here, and you can see the 1st of January 2018 here. So this right here marked the peak and we started to descend. It is important to note that this right here could have been seen as a bearish engulfing pattern here. This is something that I have talked about on my tutorial. I will leave the link to my complete beginners technical analysis tutorials in the description, so do your best to follow up on that. Now, as we can see, we peaked here and we continued to descend until here. Here we had a bit of a rally, and a lot of people would have bought in hopes that this was not the top, but actually it was. So we peaked here again and descended down till here. Now, if we look at the percentage here, we will see that the general market crashed by a factor of 87%. So that is an 87% drawback from the initial top right here. Now, I am showing you this to be fully transparent on the dangers that crypto presents. Don't be fooled by a lot of people that you will see on media telling you that we will continue to go up. It's always about going up. Very few people open up and tell you that these are the risks that we actually have, and this is how far down we can actually go. So we can see that this here was a capitulation phase, meaning that people had no interest in crypto. A lot of people gave up. So that led to this sideways action right here until this. So here in 2020, the ginormous rally begins. So as we can see from this chart here, starting from the bottom of the last bear market to the previous top of this bull market, that would have been a 2,245,000% increase in price. Now, if we look to here, which I consider to have been the top of this bull market, this would have been a 2,651,000% increase in price. Now remember, this is for the entire crypto market. So, ladies and gentlemen, the question comes to mind. Was this the top? Did we see the top of this bull market here? Now, if this was the top, it will mean that we saw the top of this bull market earlier than the top of the 2017 bull market. Now, if we look at this chart, we will see that everything points to this being the top. Let us explain, and to explain this, we have to look at Bitcoin. So, this is Bitcoin on the weekly time frame. We see that they are very similar charts. Now, because Bitcoin has majority of the crypto market capitalization, its chart always looks like the entire crypto market chart. If we look here, we will see a lot of similarities between the two charts. Apart from the fact that we see that we had an uptrend here, which of course was breached here. Now, by being breached, it means this needs to go down. But there is a problem though. If it actually goes down by virtue of the distance from here to here as it normally should, it will breach this higher low here. Now we all know that higher lows confirm an uptrend. Higher highs and higher lows confirm an uptrend. Lower lows and lower highs confirm a downtrend. So as we had this right here, this breached this higher low here, confirming a downtrend here. Now that confirmation will not only confirm the downtrend, but it will also confirm a head and shoulders pattern here. This now here will be the head and shoulders pattern. However, there is a reversal building up its way here. If you've been following along, then you should have seen my YouTube post. The other day I made this post on YouTube, 41, this is supposed to be 41k coming up soon. Tomorrow might not be a good day. However, the charts indicate 47,000. A bounce at 41k will confirm an inverted head and shoulders pattern. That is exactly what happened here. We did bounce. Now, a lot of people keep asking me, how the hell did I know, or how do I even know what is about to happen? And here is how I know. I look at the higher time frames. I am always on the higher time frames. This is the reason why I might say something, and it will take time, of course, but it will happen most of the times anyways. So we can see here that what caused this descent is the bearish engulfing pattern that we see here. So the green candle before the red big bar is the bearish engulfing pattern. But we can also see an opposite version of this here. So this is a bullish engulfing pattern signaling that we should go up. Yeah, that should happen. So it is only logical to think that there should be a reversal somewhere around here. However, that reversal may not go back until here. We see that we had an uptrend, as we have said before, but the uptrend is not only the problem. We had a breach of that uptrend. We had a breach of the former higher low here, and we have formed a head and shoulders pattern on the weekly. All of this is pointing to the downside. I insist on this because I get a lot of DMs and a lot of comments on my videos like, what should I buy now? This is not the time to be buying. This is the time to be looking for a way to get out while you can. If we look here, we will see that BTC has a very high likelihood of descending to $17,000. Now, I do have a more accurate prediction on that, but let's save that for another time. For now, we are here. What we are most concerned about is here. What is going to happen here? Considering that we have a bullish engulfing pattern here, this bullish engulfing pattern will only continue to work so far as we close the weekly above this resistance line right here. The resistance line is at $42,750. So if we close above this line, which I think we will, this will then form an inverted head and shoulders pattern here. So this is on the weekly. Let's see how that will look like on the daily. So on the daily, we will have something that looks like this. It is important to note that the $51,200 level that I was talking about here is a fast-tracked target, which means the head and shoulders pattern that should indicate this was not formed yet. So in situations like this, the closer you get to the target, the more profits you should be taking. And as for me, I will take most of them out at 47k. Now, the other day I was asked a question, what if you are not in profits? What should you do? So let's take for example that you bought a coin for $1 and it lost 50% of its value, which means the coin will now be worth 50 cents. And the rally that we think will happen does happen, and the coin that you invested in rallies up to say 80 cents or even 75 cents. This will be a good level to accept your loss and take your funds out. It is not only when you are in profits that you should be cashing out. Cash out when you see that the danger ahead is greater than a rally that is based purely on hope. Now, there are two events that I think must come into fruition before we go into a prolonged bear market. Ethereum will fully transition into a proof of stake cryptocurrency, and this may happen anytime from February to March next year. Now, this means after this transition, ETH will no longer be mined, and the block rewards will be cut into three, called the triple halvening event. Now, another thing to be excited for is a spot Bitcoin ETF. Now, spot Bitcoin ETF means that many institutions will be able to own Bitcoin indirectly. Now, this will propel the price of Bitcoin. Without these two events happening for Ethereum and Bitcoin, I will remain skeptical of a bear market just yet. The idea here is that in the bear market, we also have price pumps, just as much as in the bull market, we also have price dumps. Now, these pumps and dumps must have their narratives. And in this case, the narrative has to be so huge that retail investors will be incentivized to also invest. As we go into the bear market, of course, we will have a lot to do. Dollar cost averaging and staking are some of the things that we will be doing as we go into hell. Now, here is a piece of good advice. If you do believe in a project, stand by it. Dollar cost average your way into it, even as we go into the bear market. The idea here is that you will have coins to stake. Now guys, I know it's been a long time since I posted any video, but if you did learn anything from this video, like the video and subscribe to the channel if you haven't. This is the feedback I need to know that I should be making these videos every other day. See you in the next video.